Top 3 dividend stocks during this stock market crash. Now, we have seen the Dow Jones plunge. We saw the S&P is crashing and the whole stock market is a complete disaster. Now, but what we see on the market, or what you should know, is that dividend stocks actually don't lose that much like the overall market, and that's why maybe it's a really good chance to pick up some dividend stocks into your portfolio. At least they give you some money on regular basis and they don't lose that much, and maybe some other interesting facts that we will talk about in this vlog, and therefore let's roll. So welcome to the show, and today we are talking about dividend stocks. Dividend stocks are stocks that paying you on a really regular basis part of the profits back to you as investor, as a thank you, as you know, as gesture to give back to their people that fund the overall business model. Now, there is 3 stocks that I just researched that I think are a great opportunity if you want to go this direction. Now, what we need to know that dividend stocks are regular paying businesses and regular paying company profits to investors, and therefore it's important to understand how much they would pay and why I think these 3 stocks, after my whole research, you know, which deserves maybe a like up, thank you so much, and also subscribe if you're new here and to want to be daily entertained and daily informed about the stock market. This is a great chance to do it right now. So once we started, I will definitely give you also my personal opinion why these businesses actually matter to me, and I think they are great businesses overall, and therefore without further ado, let's roll. One of my favorite dividend stocks is definitely Disney. Why? Because they have a great brand, they have a great product, they have a great business model, and they will be most probably around for the next couple of 100 years. Now, they also came with a product that, you know, it's a little bit difficult to say, but think about when now people stay more at home, they will more watch streaming, right? And they have their own streaming service, Disney. Disney stock actually lost a couple of percentages, to be fair. Now, let's say from their highs, let's say from the beginning of this year, which was the 1st January, until now, they lost about 27%, 1/4 of the company. Can you imagine? And they still will produce movies. They will still issue new movies in the theaters or on their streaming services. They have 2 main distribution platforms now. The company is valued about $194 billion and is paying a dividend yield of 1% and 54, which is not the biggest, but still to be considered, a quite interesting company in my perspective, and therefore, I will add to my watch list. Alright, so let's talk about AT&T, the biggest telecommunication provider out there in the US. And there was something happening over the last couple of months that Elliott management went into the stock. They are considered a grasshopper when buying into companies with voting rights, with board seats. And since then the company quite significantly got some percentage up, but then over the last couple of days and weeks, obviously from January 1st until now, lost about 10%. However, I think the dividend yield here is very high with 5.59% on your money invested. I think this is a great deal because they said once they went inside a company, they want to make the company more effective. They want want to stop the merger and acquisitions that actually brought AT&T a bit down over the last couple of years, and they make some bad acquisition. Let's put it in this way. The summary is they really did some bad acquisitions which they had to pay billions for, and Elliott management went inside. They want to make the company much more profitable, stop the merger and acquisitions. They want to keep the high dividend yield to attract more investors, and they see price for the stock at about $60. That is maybe very, very good, because the stock is currently suffering somewhere around $39. So this will be a huge increase, almost 50%, which the stock will go up, and therefore I believe a good opportunity. I think the Elliott management did something similar with eBay successfully, and I believe that's a great opportunity to buy a nice business in the US, a great leader in telecommunication, a business that will be now shaped better for the future, and a high dividend yield with the opportunity of growing 50% in value for the stock. So can you wish for more? The last stock is a stock that I really fight it with myself to show it to you, but I think if you consider something in this space, maybe those are the good guys for you. Now I'm a very convinced Tesla investor and looking for the electric mobility, and therefore thinking that sometimes the traditional car manufacturers are not on the highest point where they should be and have a lot of down potential, but with a dividend yield of 2.49% and a strong core business, I would say, strong brand, strong product itself, I think if they keep on working on their vehicle portfolio and their strategy, that they can make the turnaround and then maybe even have a great turnaround stock over here with a PE ratio of 14. It's still not where I personally would see it. Definitely it's something for the watch list, not to buy in this moment, I believe. But if you want to pocket the yield of 2.49%, obviously it's something that you should consider. However, they also either increased or paid out the dividend in the history, so it's a really stable dividend paying company, and in the end of the day, a very traditional brand which should, if they don't make a big mistake, be around for the next couple of decades. And therefore this is number 3 stocks. And before switching off, I would like to tell you something more about dividend investing. Now, if you're buying into the stock or if you are a dividend investor, you are playing more on the safe side, because in general, dividend investing is something that people like to do if they want to have regular returns paid to them, and that they can reinvest into the companies, which is something very crucial. If you want to achieve the highest return of your capital, then dividend reinvesting is so important, because if you see dividend reinvested into companies or stock portfolios, then you see a much bigger return than not reinvested. Therefore, this is something that I want to give you on the way. However, if you would like to have those dividends, make sure to reinvest them into your portfolio. This is very important for your return of investment in the end of the investing period horizon, and therefore make sure to do that. On the other side, you are a little bit on the safer side. For dividend stocks showed more resistance against crises and better and faster recovery as well, so you are more secured on this up and down roller coaster that we see currently. However, I think if you are buying now, you can increase your dividend yield a bit, and those 3 businesses have a great product or business model. Disney, obviously, with the content factory, AT&T, the market leader in telecommunication in the US, and Daimler with one of the market share for the premium ICE vehicles and hopefully can make the transition. You always have risks, and this is most probably the biggest risk for Daimler. And I hope you enjoyed. Like this video and subscribe, and I see you tomorrow.